Hey everyone, Adam Big Hill here on January 30th, bringing you your weekly financial film review, where I try to take major news and themes and help you understand how they impact your money. So let's start with the news everyone is talking about today. So, first off, well documented and publicized, Trump nominates Kevin Warsh as the next Fed chair. But we got a handful of things to dive into. Let's just start with the Fed holding rates steady. So that meeting on January 28th kept rates steady at 3.5 to 3.75, which is basically pausing after their last three 2025 cuts, which was expected. There were a couple dissenters, people who were pushing for a quarter point cut. Chair Powell emphasized basically a firm outlook in 2026, stressing data dependency and no rush to ease further. So, this is important because it kind of comes into this next point and the news we're all talking about today. Trump picking former Fed Governor Kevin Warsh to succeed Powell here in May. And that's pending Senate confirmation. But Warsh is a Fed critic. He's called for steeper cuts. He's called for a regime change, aligning more of Trump's push for lower rates to boost growth, raising independence. One of the main things that he had on his agenda as well, that is the Fed being overly political, and why are rates not lower to this point? Or, for example, why rates were cut right before the Biden election. Things of those nature, we'll see where this goes. But basically what this means, if Warsh gets in, probably some cuts pretty well right away. We're kind of seeing this in the near-term bond market, reflecting this with rates going down. This is our 5-year US Treasury with the candle today, pretty big candle. But if you fast forward out to the 10-year and the 20-year, these yields are going up, which is not surprising. 10-year up to 4.239 and 20-year up to 4.824. If we're lowering rates, you're probably expecting some higher run it hot inflation numbers coming in the longer end. Another huge headline this week in volatility, gold, silver, copper, commodities all kind of smashed through to record highs this week. Gold all the way up to 5,500 an ounce, silver all the way up to $120 an ounce, silver up 65% year to date since January 1st. But then today, seeing a massive red candle down. Speaking to some of the froth in the market, we had just a massive run in metals over the last while here. And we don't think it's done by any means, but got to be mindful that when we have these massive run-ups, if I back this out, look how vertical this gets. This gets really, really extended. And when these things happen, blow-off tops have to come. That gets overreact to the upside. We're going to get the same thing on the downside. So this is silver here. I'll show you gold. Fairly similar. The pullback in gold, roughly 10%, not nearly what it was with silver. Silver being roughly a 26% pullback today. So we own both of these metals. We think they're critical in protecting portfolios in the future. We've been trimming silver along the way to avoid something exactly like this. You have to trim charts that go vertical and exponential, which we've been doing. Just a quick look at copper, fairly similar chart. Metals and commodities and real assets are an important asset class that you need to look at. There's a lot more focus on real assets and securing supply chains. Once again, something we're going to do a lot bigger podcast and talk on. Lastly, before we just wrap it up, talking about Japanese government bond yields. For a while now, they've been spiking. I'll go right to the 10-year yield chart wise. These yields have just gone nearly vertical in such a short amount of time. This is problematic when the yields start spiking like this. This is concerning when they go so fast, especially Japan being has been a area of relatively cheap capital just based on their near zero interest rate policies. And a lot of people will be borrowing in yen to be able to invest overseas and other places in the world. As these bond trades start moving, this inevitably causes ripple effects, which calls capital back home, is going to drain liquidity from global markets. These rates keep rising, eventually something's going to break. We are closely watching to see if this is going to spill over to the 10-year US Treasury. So that is it for this week. We'll bring you another one next week. Hopefully, this is insightful. Some quick takeaways, things to think about, things that are important. If you got more questions, please reach out. Very important times in the market. If you haven't listened to some of our podcasts yet, the investment playbook that we have on YouTube, Apple, and Spotify, I definitely recommend it. It's more in-depth stuff on precious metals and overall economic thought leadership that we're trying to bring. So have a great weekend, and we'll see you next week.